Well, in case you hadn't heard, we have big USDA set of reports coming up tomorrow. They'll be released at noon Eastern Time and 11 o'clock Central Time tomorrow. It will include the crop production numbers and the supply and demand report. So we have early estimates of the report. I wanted to walk through these with you in case you wanted to jot some of these down for reference for comparison to when the numbers do come out tomorrow. So first of all, on the U.S. ending stocks here, we have the corn pegged by the trade at 1.78 billion bushels. We have the soybeans expected to be around 900 million. That would be a record. The wheat is expected to be 966 million bushels for the ending stocks of U.S. supplies. And if you look at the world carryout, we can roll over to those numbers too for the 2018 and 2019 marketing year. This is looking forward. The corn is pegged at 158.6 million metric tons. That would compare to USDA's October number of 159.4. So they are looking for a decrease there. Soybeans at 110.8 million tons would be an increase of roughly about 800,000 tons from last month. And wheat expected to be 259.3 million metric tons. That would be about a million under what USDA had last month. Meanwhile, for the corn production and soybean production, they are looking for corn yields to be about 180 bushels per acre and soybean yields at 53 bushels per acre. Let's go to the trading floor and talk with Scott Gecas of Longleaf Trading right now and find out what the mood is on the floor. What are the traders talking about here this morning?
Yeah, everyone's just getting ready for that number tomorrow. So you had all the midterm elections come out. It was pretty much a non-event for the grain markets. It got a little bit of lift in the stocks. But moving forward, going into tomorrow, we're not really seeing too much volume, too much position trading. You are seeing a little bit of upside calls being bought in corn, but other than that, it's pretty slow, pretty quiet. The soybean market in particular, yields are expected to be offset by the lower exports. One thing I want to mention about the exports as far as the soybeans go, October and November are the biggest months for exports. Now, the exports are very light, very weak. With Argentina coming out and saying that they're going to go into start meal exports, that just confirms that China's trying to back away and avoiding U.S. soybeans at all costs. So we're going to see how that number is going to play out tomorrow. We're looking at that 900 or the 9 cent level as a key resistance level.
Let's go ahead and take a look at our prices here, Scott. On the corn market right now, we had a softer tone to begin the day. And right now on the corn futures in Chicago, we have December still down a penny at 372 1/4. Very narrow trading range, only 2 cents again today. On the soybean market, we currently have the January contract down 6 1/4 at 878, still off of our earlier overnight high by over a dime. If you look at the wheat market in Chicago wheat, we have December down a penny and a half at 510 1/2. It's kind of in the middle of its trading range now. July down 2 3/4. Kansas City wheat, we have the December contract 5 1/4 lower at 502 3/4. That's still about 6 1/2, 7 cents off its earlier high from overnight. Minneapolis trade, we had the December contract down 5 at 583 1/2. That's a penny off of its low of the day. And in the cotton trade, it had a big rebound this morning. December cotton is now up 159 points and it's back over 79 cents at 79.02 as we speak. We'll come back in a moment and talk more with Scott Gecas about our livestock trade, and we'll have Scott when we come back after this. Well, in the wake of the election day yesterday, I wanted to kind of keep one eye on the equity markets and also on the dollar value. The Dow Jones Industrial Average I saw was up about 270 points after being lower overnight and then rebounding by the early morning hours here. So keep that in mind. Remember, yesterday it closed higher, and now we're up about 270 again. But what's the dollar doing? Well, let's take a look. On the December futures, we're down 460 points now at 95.660. There for a while, it had been firming up, and now it's kind of selling off once again, getting close to 500 points lower. And then you have the crude oil trade on West Texas Intermediate crude. Here's another interesting story today. When we came in this morning, the crude oil market had been trading higher, 30 to 40 cents higher when we reported earlier in this broadcast. Well, now you have December futures down 69 at 61.52, kind of trolling around toward the lower end of the trading range today. And that's over $1.50 off of our earlier high this morning. It got as high as 63.18. So something apparently is happening in the market here in just the last few moments. Now we're down 71 cents. And we can take a quick peek at the Dow, too, I believe, and get you updated on that. Currently, the Dow in New York is now, as I mentioned, 267 points higher at 25,901. So, Scott, any word on this crude oil jump to the downside all of a sudden? You say you saw it change as you came walking up on the stand there.
Yeah, coming in this morning, Saudi Arabia and Russia were cutting output, rumors that they were going to cut the output, so we had a big spike on the open. As I was walking out, you've seen a big sell-off. I haven't seen any news coming across the headlines here as of yet, but we're going to see how this is really going to play out going forward into the rest of the day.
We've talked about this several times, about the relationship between the equity markets and the livestock trade. Let's go ahead and take a look at our live cattle market right now. And with the equities turning around and going much higher today, we have the live cattle still lower. We have the December live cattle down 58 at 114.85 per hundredweight, and February down 85 cents now at 119.55. So it's still below 120 on the February contract. Meanwhile, on the feeder cattle trade, let's go over there where we have January 92 lower at 145.68, and now that would be about $1.35 off our earlier high this morning. Not that far from our low. And on the lean hog trade, this is the one that closed limit down yesterday, and now we have December lean hogs up $1.13, and we're trading at 55.23 per hundredweight right now. All the deferred contracts are about 25 to 53 cents higher at this time. Real quickly here, Scott, do you see much optimism about follow through on the lean hog?
On the lean hogs, I mean, the hopes that the African swine fever was going to take effect, those hopes are dwindling. The exports just aren't showing up. So until those exports show up, we expect a little bit of a pullback, especially with the cattle market breaking at 115 level. If we get a close below that, we have room to run all the way down to 110. So we're going to see how that really plays out.
Wow. Okay. Well, thanks for pointing that out. I appreciate it. Good to visit with you, Scott. Scott Gecas of Longleaf Trading in Chicago.